As a person who come from healthcare and the hotel industry, I do not have any knowledge about the finance. Then I thought, okay, let me just take a risk of 1 lakh. I told my wife, let me take risk with 1 lakh. She also agreed, readily agreed. We invested that fund. We bought few stocks as well. And during the Lehman crisis and the Satya Sagar, that's when my portfolio started to tank. And then I said, the stock prices is going from 600 to 400. What should we do? He said, boss, if you have extra money, let's average it now, because it's going to give you a lot of huge returns in the future. Without even informing my wife, I started to accumulate and then started to take out all the savings, invested everything. Within a year, the 1 lakh investment became 10 lakh. But unfortunately, due to this crisis, the Lehman and then the complete 2008 crash, the portfolio of 10 lakh became 1 lakh.
Have you ever tried using scalping as a trading strategy? Scalping is a strategy where you do quick entries and exits, and usually your trades last only a few minutes. Today we have with us Siva, who has been doing this particular trading strategy for over a decade. Siva will be sharing with us a complete scalping strategy with defined entries and exits, and one which you can use to trade options. So let's talk to Siva and understand how to perform scalping. Hi Siva, a very warm welcome to Trading Baat.
Thanks, Arjun.
Siva, a pleasure having you here. As far as I know, you've been in the markets for a very long time now. And you originally did not start with the markets.
True.
So how did you get into trading?
Okay. To talk about my journey, I was initially in the hotel management sector, then moved into the BPO, healthcare BPO. I was running a large healthcare BPO in Bangalore. At that time, people were looking for opportunities to get the passive income, right? Even I was looking for the same. There was a colleague of mine who used to, I was subordinate working under me, but he used to come in car. I used to ask him, what is a methodology or something which you have got, wherein I'm unable to do it with two salaries, me and my wife both were working. He said, boss, the simple solution. Whatever the money which I make, I just put it in the markets, and the market has given me rewards. This I'm talking about in 2006-7 period. Those days, you touch anything, it will become like gold. So even I thought, okay, I think if he's able to make money without any experience or knowledge, even I should be able to make money because I'm a manager. And he told me, boss, I used to buy the stock DLF at 1,200. Now it is trading at 600. I'm still holding it. Then I thought, okay, I'm just getting it at 50% discount. Let me also go buy. Without even realizing about anything about the markets. Only thing is, he said that he has been buying stocks and it has been giving returns. As a person who come from healthcare and the hotel industry, I do not have any knowledge about the finance. Then I thought, okay, let me just take a risk of 1 lakh. I told my wife, let me take a risk with 1 lakh. She also agreed, readily agreed. We invested that fund. We bought few stocks as well. And during the Lehman crisis and the Satya Sagar, the market started to tank. That's when my portfolio started to tank. And then I said, the stock prices is going from 600 to 400. What should we do? He said, boss, if you have extra money, let's average it now because it's going to give you a lot of huge returns in the future. And he has seen some swings also in the past, and I believed him. Without even informing my wife, I started to accumulate and then started to take out all the savings, invested everything. Within a year, the 1 lakh investment became 10 lakh. But unfortunately, due to this crisis, the Lehman and then the complete 2008 crash, the portfolio of 10 lakh became 1 lakh. Then I panicked because the DLF, it came around roughly about 120, 140 odd levels. We panicked. We started to book our losses. The reason is I thought I'm saving the last 1 lakh. But we never used to look at the Nifty P ratios and other things at that time because we were not having any knowledge. But if you'd have seen it, that was the best time for you to even sell your kidneys and invest in the market, which many people would have agreed. I was holding some good large caps as well, like Bajaj Finance and then Tata Motors, ICICI and everything. But when you are in a bad phase and you wanted to exit the market because you do not know anything, as a newbie, as an investor who entered into the markets, when you are seeing 90% fall in your portfolio, then you would immediately wanted to cash out the remaining. We cashed out. We thought we have done the best thing. This market is not for us. The equity is not for us. Immediately, my friend, I asked, I cannot say this to my wife. We somehow needed to recover the money. Tell me other ways to recover it. And we know we are going to be getting 50,000 to 1 lakh as a performance bonus in the company and other thing. Then he said, boss, there is another instrument which will give you multifold returns and they will be giving you leverage. I said, if you are having 1 lakh, they will give you 10 lakhs.
Tell me it was FNO.
Yes. Unfortunately or fortunately, that's FNO, and we moved into the FNO segment. And without even knowing anything about FNO, the perils of FNO, we entered into it. We entered into the futures, options, stock futures, you name it. We would have traded everything under the hood. We made money on one segment, we would have lost on other. In fact, you wouldn't believe, there was a day, both of us were buying and both of us were losing. And I said, we will do a smart thing today. What is that? You buy a call, I'll buy a put. Someone will make money. And at the end of the day, we will share it. So that particular day, he bought a call and I bought a put. Still, we ended up making a loss. You know why? It's because of the theta and then the time value, and it is on an expiry. We bought it at 100 and we were wondering, how can it happen? Both bought it and both have lost it. One bought a call, one bought a put. So that kind of a knowledge which we had at that time, without even knowing anything about the basics. So it took me several years. The curve was like in 2007 to 2010, I was losing continuously. Whatever the money which I was earning from the performance bonus and everything from the company, we were investing it. There was a point wherein, luckily for me, the business and whatever the work which I did, it was giving me good salaries and bonus, and it was able to support my families. But there was a point, I said to myself, Shiva, this is not going anywhere. You are losing everything, whatever that you're making money in another work. Then somewhere I needed to tell my wife also, because she was also expecting that we will be moving into a new house once a new kid, like a kid is born. But unfortunately, I have to tell her, sorry baby, I've lost everything in the markets. Now I needed to get it back. Even I was thinking, and somehow I needed to get everything back from the market itself. But till 2015, it was all completely getting drained. There was a point wherein I would have lost up to 2.5 CR. The accumulated losses which started with 9-10 lakhs, gone up to 2.5 CR by 2015.
This was in FNO.
In combined of FNO and equity which I lost initially. But equity was very less. FNO was 90% would have been in FNO. In 2015, then we realized this is not taking me anywhere. I needed to either stop or do something else. That's when I told my wife. Luckily, I got an exit from the healthcare BPO. Then I told her, let me take this 1 CR. Think that you guys didn't get this fund at all. Let me play with this, lose or do whatever that I wanted it. If I lose it, I'll quit the markets. If I make money, then I will continue to do it. When you started taking that as a risk, you wanted to challenge yourself and you wanted to prove to someone. That's when my real learning started in the markets. And luckily for me, in 2016, the Baat Nifty weekly expiry came into the picture. If you are just going to be playing in the monthly options, 90% of the odds is going to be favoring the sellers, because every day they know they will be able to manage it and then bring down the prices in a systematic way. You do not have any control. Every 10 rupee rise, you will see a 40% fall, 40 rupee fall. In those scenarios, I thought this is not my cup of tea. Luckily, the Baat Nifty, which had a higher index value, and the weekly expiries, the volatility is increased. First 6 months, it was very difficult. The reason the volumes were very less on the weekly expiries, but it picked up pretty fast. Everybody started loving it, both the sellers and the buyers. The reason is because of the higher index value. Then it gave me some kind of an hope. And maybe around 2017, I started to decode a little bit of information. Initially, I used to see only the green and the red candle. Then I understood, no, this is not going to be there. There is much more than that. What is that? The open interest for the future market. So open interest became next to God for me in the options segment and the future segment. If you're able to decode the open interest in terms of whether it is a long build-up, short covering, or long unwinding, based on that, I started taking trades. Then understood that it is not going to only help with only the OI. You also needed to understand the chart indicators and everything. Plus, you also needed to look at the various news portals for the news which is going to be there, be it the weekly numbers or the monthly numbers, IIP, the inflation data, the US market data. And then the first thing which we started tracking is always the Dow. Okay, even before everything started, even during the initial phase, only one indicator was there, which is Dow. We will see the previous day Dow. If it has closed positive, then we will go on the green side in the morning here. If it closed negative, we will go on the put side in the morning. That was the only indicators which we were using. Then we understood our markets has a different dynamics altogether. So whatever the indicators which you see it in the chart now, these are the indicators which I use now. Very simple, along with the open interest data, which I will be sharing it to you. So 2016 is the period.
So it took you about 8 years or more than that to find out what works for you.
Absolutely.
And everyone has a different trading style that suits to their personality. And it takes a lot of time to figure that out. Basically, I think that is what trading is about. It is finding your trading style and what works for you. Now, You excel in scalping. And I personally believe scalping is one of the hardest ways to make money.
True.
And as your time frame becomes smaller and smaller, let's say you go from investing to trading and then you go from trading to scalping, it becomes more and more difficult because your reactions have to be so quick. And you have to take instant decisions.
True.
Now, how did you figure out that scalping is the thing that works for you?
Okay. The most important element, how I figured out my personal attribute will suit to scalping. Whenever I see a profit, be it like 1,000 or 2,000, when I see my M2M in green, I immediately tend to book profits because that is like in your nature. Similarly, when you see a loss, you tend to hold it for a long time, thinking that somehow like I'll be getting my price at the average traded price or somewhere above the price at which I bought it, I'll be able to close it in green. 90% of the time, if you look at my past history, the trade should have gone in green. Only 10% of the time I was losing. But those 10% I was losing big. Why? Because I was just holding it. And one more thing which I found out when I was scalping is, when my winning trade is only with 200 or 300 quantities, my losing trades are with 1,000 quantities. The reason is I tend to average more on the losing trades, but when I'm winning, I'm not averaging it more. So these are some of the areas wherein I started working. And particularly as a scalper, then I understood, okay, initially I do not know the word scalping itself. Then I understood if I'm entering into a trade and exiting within 2 to 3 minutes, why am I holding my losing trade? I also needed to exit my losing trade also within the 3 minutes. Once I started doing this, my risk reward had started turning better. In a 20-day period, I would normally make money on 15, lose money on 5 days. Earlier in 5 days, I would have lost the entire capital. But now the 5 days would have given me like in a 5 to 10% of loss, wherein the winning would have been 20 to 30%. So overall, it would be roughly about 10 to 15% in a month. We were able to make it on a small capital. Yes, scalping, the advantages, all your pressure, things and everything, whatever that goes in your mind, everything is completed within the 3 to 5 minutes. Because beyond that, you don't have a position and you can stay relaxed. But imagine if you are a positional player, you needed to hold it for the whole day. Look at all the volatility which is going to be there. Your M-term fluctuations will be there. By the time, whether you will be able to adapt to it, I don't think I have that personal attribute to adapt to that. That's when I realized, Shiva, this is what suits you. Stick to this. Only thing which you needed to make a change is, if your winning trade is within 3 minutes, your losing trade also should be within 3 minutes. If you're able to control that nature, then yes, you have arrived. Yes, I made certain changes to the way I define my risk management and then the stop loss and everything. But those are the things each and every trader will do. Any trader, trading is something which you cannot learn from someone and then just imitate them. It's not going to be possible. You have to find your own niche. Find something which will be very unique from among others, pick up that one or two and then start to build your own strategies. That is where I have found myself a little bit of a success. Yes.
Shiva, like scalping, a lot of people lose money in scalping. Right? I would say majority of the people end up giving it all back to the market when they do scalping. Now, what do you think are the primary reasons people lose money when they do such a trading style?
Many think that scalping means like you needed to punch orders right from 9:15 to 3:30. Doesn't mean that. And nobody is forcing you to go and punch your orders all through the day. It's you who's taking the decision. The disadvantage of scalping is when you're entering multiple times into the market, first and foremost is the brokerage, plus the additional charges which you needed to pay in terms of the SCT, the SEBI charges and everything. Yes, the charges are going to be more compared to the normal way to scalping. But the bigger advantage is, imagine if you're a positional player, you normally look for 100 points in a setup. I look for 20 points. Though I look for only 20 points, my entries will be 4 or 5 times, your entry will be 1. So your charges will be minimal, my charges will be much more. Yes, that is a big disadvantage in scalping. But all in all, what is a good thing is, imagine by the time it reaches 100 points, you would have seen 70 and then it would have gone to another 70 on the downside and then it moved to 100. For me, I would have scalped on 30 points on the upside, 30 points on the downside. Again, near to the support territory, I would have taken another trade. By the time you complete your trade, I would have already achieved my ROI and you would have also achieved the ROI. Approach is different, but the process in which I get the money is different, you get the money is different. But my charges will be little higher. That is something which I have to accept it. So as a scalper, I needed to accept the pros and cons coming along with scalping rather than just thinking about, no, I needed to enter and exit. I don't want to pay much charges. That's not going to work in scalping. As a scalper, if you're able to adapt to this and understand the nuances of scalping, then yes, in the long run, it will give you a good reward. Most importantly, the peaceful mind which you will get once your trade is done. And another thing is, Many people think that, okay, every candle I needed to enter. No, not necessary. Even here, looking at this setup, you would see now the market is clearly not able to move beyond the WMA. So you asked me, right, why EMA or WMA? You can clearly see in the last 20 candles, they were not able to break the WMA. So this is a perfect opportunity for me to take a support trade.
This acts like a support.
Exactly, it's a perfect support. As a scalper, these are the things which I wanted. One support in this one, I would have easily got around like 40 to 50 points. That's more than sufficient. Again, if they are testing this area multiple times, they will definitely go towards the super trend or the VWAP. This will be my second area of trade. Imagine if I get 3 or 4 trades, 90% of the time you are not going to get a trending day. You will normally get a zigzag day. If these are the areas wherein you can concentrate, you will at least get 4-5 opportunities, and I shoot for 1%. Only thing is, a big difference between a buyer and a seller. Buyer will not be able to manage a large quantity if you are a manual trader, but whereas a seller will be able to do it because of the liquidity available, and moreover the options is purely driven by the seller. That is a bigger challenge for the buyers. And 90% of the retailers less than 10 to 25 lakh capital. They all play with that kind of capital. So for them, buying, yes, it works, but it has a lot of pros and cons. Without knowing the complete nuances, it's going to be a risky game. But yes, there is a saying that only sellers make money. No, not necessary. There are buyers who are also making money. There are sellers who are also making money. It's all about the entry and exit, how you perceive the particular way of trading, and then just follow with the discipline.
A lot of people identify themselves as option sellers or option buyers. There are two categories of people. Now, when it comes to scalping, do you think one is better than the other? One should go for option buying or option selling when doing this kind of a style?
90% of the scalpers, if you ask them, they will all be buyers only. Scalping is something wherein you are going to be entering into a particular trade without hedging. You are just going to be there in the trade for 3 to 5 minutes and then getting an exit. As a seller, even the 3 to 5 minute can be a dangerous game if you're a scalper who's doing it without hedging. The reason is you do not know what kind of spike which is going to be there. The price at which you were sold, maybe at 10 or 20, if you're not placing a stop loss, it can immediately go to 200, completely wiping out your capital, much more than that as well. But as a buyer, if you are entering into 500 quantity, your risk is only for that particular amount, the premium which you have paid. Otherwise, scalping suits the buyers more than the sellers. So sellers normally don't prefer to scalp because bigger the holding period, they get better the premium. For us, lower the holding period, we get better movement and then get an exit.
So off late, markets have been volatile. Let's say the past 6 months, expiries have been volatile. So I'm sure it must have been advantageous for buyers doing scalping?
Yes, it has been an advantage, but sometimes it can be crazy as well. Why? Someone who's used to 20, 30 or 40 point scalping, then we also place our like in a stop loss also within the 20, 30 point. But what is happening is nowadays you're getting a sudden one spike candle wherein you will get to see a movement of 200 or 300 points. Imagine if you're on the wrong side and if you have not placed your stop loss, you tend to lose a bigger pie in that. Volatility is fine, but bigger volatility and 1 or 2 spike volatility, that's not going to be good and healthy for the markets. That's what we have also found. But it has been working good for us. But in the long run, market has a pattern. It will not reward only one set of people. You will see a period wherein only the buyers will be able to make money. There will be a period only sellers will be able to make money. There will be a period only overnight players will be able to make money. You will see a big, large gap up or a gap down. Intraday, it will be completely silent and it will not do anything. And if you have bought it overnight, you would have made money. And there will be a period only positional players who have been holding for a month or two, they will be able to make money. All others will not be able to make money. So if you needed to know, you needed to understand this pattern, where it suits you, stick to that. And then if there is a period, there will be like you needed to make money when the sun shines, and then there will be a rainy period as well wherein you will not be able to make money. You just needed to sit at home, do something which interests you, look for some other opportunities as well. Even in the last 2-3 months with the way things have been happening, yes, the volume has come down, the Bank Nifty has lost its mojo. Now Sensex is picking up because it is coming into the weekly expiry. So as a trader, you needed to keep adapting yourself, looking for the constant changes which is happening, and adapt yourself according to the situation. You should be able to be good.
Shiva, when somebody is doing scalping, every green candle is a buying opportunity and every red candle seems like a selling opportunity where they would want to buy put something. So how do you propose that we put a framework or a strategy to all of this? Like what kind of a setup do you follow that you suggest people can learn from?
True. I think many people think that scalping means you have to buy on every candle. If it is a green, we'll go on the call side. If it is a red, if it is, we'll go on the put side. No, it is not. Even for scalping, we have set a formula and set a case wherein you just needed to go with the design what we have done. Each and every trader will have their own setup. Even we have our own setup. We don't take trades through the day. We only look for certain opportunities, and if the market is providing me that opportunity, we'll go and take a trade. So based on this, I've added few indicators. One is the VWAP, WMA, super trend. This is all on 3-minute time frame. So on a 3-minute time frame, I use the super trend multipliers around 10 to WMA default 20, and then VWAP as a default. So here, when I look at it, what are the other indicators which I've used? The volume. Ones which are highlighted here, these are hard-coded, which will show you whenever the Nifty has passed with 125K in volume. So this is based on the historical numbers which I have seen, plus the RSI level.
And excessively large volume.
Large volumes. So I always play along with the momentum, plus with the data here. So if you look at this is the RSI. So RSI between 20 and 80 for this setup of 3 minutes. As a scalper, I normally look for. And 40 to 50 is my no trade zone. 50 to 75 is my buying zone. 75 to 80 is the area where I book the profit. Similarly, 40 to 25 is my area wherein I go for the put buy or like selling the futures. 25 to 20 is the area wherein I book my profits. Anything above 80 is overbought. Anything below 20 is oversold on a 3-minute time frame. Here, what did I say? Earlier when you looked at it, the first support trade would be somewhere around the WMA. Once the WMA tested multiple times, it will break. It will come and go near to the super trend. You will get one more opportunity. If you look at this particular candle, this following candle would have given you 20, 30 points if you are playing in the Sensex. These are the trades which as a scalper, one trade here, 2 trades is already there, live trades.
So the second trade you mentioned,
yes,
that means whenever it touches the super trend,
yes,
it's an opportunity to go.
Exactly. Your first line of defense is your WMA, second line of defense is your super trend, third line of defense is your VWAP. Now, in order to get in here, will I enter in any time of the day? No. I normally go and take a trade during the first 15 minutes based on the previous day OI. The next 9:45 is 2:30 is the time where I will look for the 2-candle theory. So normally on the 2-candle theory, I look for 2 information. First is whether it is trying to break above the VWAP or break up below the VWAP. If it is breaking above the VWAP, you will normally need to see this particular part, which is your candle, the volume candle. If you see this volume, you can clearly see it is breaking it above. Normally, I would look for a follow-up. In this scenario, there is no follow-up. If there is a follow-up after 9:45, that is going to be a day wherein you're going to be enjoying it as a buyer. The reason is, whenever it has broken the VWAP with true consecutive volume of 125K, the third can, normally the RSI would have already crossed somewhere around 60, 65. That means that is a perfect opportunity for me to enter. Third candle will be my entry, and where will be my stop loss? The first candle low will be my first stop loss. Imagine these two are the candle above the VWAP. Then this candle low will be my stop loss.
All right. So let's say the price is below VWAP, 2 green candles form, and they cross over the VWAP.
Exact.
That becomes your trading setup.
So third candle will be my entry. And sometimes what will happen is, sometimes the RSI would have caused 70, 75. Then you will see the fourth candle being a red candle, third or the fourth candle being a red candle. Those are like buy on dips market for me. Because already the market has moved higher with volume. All I'm going to be looking at is the volume, the data here, RSI levels. I will also look for this curve in the OI.
Scale.
Price moving higher, OI moving higher, RSI moving higher, 3 good indicators for you. That means it is clearly saying, Shiva, someone is buying the futures, OI moving up, price moving up, it is a long build up. Price is also moving, RSI is also moving, the candles are also forming perfectly for you. Then all these are indicators for me to go on the buy side, either on the futures or on the call. Now, when all these things happen, you will normally see the indicators below the candle. That is another golden sign. When all these things happen, if you are seeing the super trend also piercing the VWAP at the same time when the candle is forming, that I call it as a golden crossover. When the super trend pierces the VWAP, when the candle moves with the volume, that's a golden crossover. You will normally get around 200 to 300 points on the back Nifty, 50 to 100 points on the Nifty.
Say super trend is crossing above the VWAP.
Correct. It has to be a vertical move like this. Can you see this? This is like today, this is more of a crossover. Why? you are seeing like a super trend and WMA both crossing together. So this is a perfect opportunity. Someone who wanted to scalp, no, if they see this, the next candle would be an entry. You would easily get like 100 to 200 points.
Wait for the super trend or the candle to close, right?
Yes, we will. Yes, the 3-minute candle to close. Once it is done, then we will immediately enter. Now, you can clearly see the market has moved higher, taken a support here, second round of a support near to the super trend. Now it is coming back. If it is breaking, the third and the final level of differences for me is the VWAP. If the VWAP is getting broken, I will quit all my buy trades on the call side. Then I will look for the volumes on the downside, and then I will go and take a put trade. As a buyer, I will be looking for this opportunity. So we do not enter all through the day. When it is trading above or below, we enter. There will be a day wherein you will see it like this. The VWAP is here, super trend is here. It is trying to fall, but it is not falling aggressively. If it is trading below and below the VWAP and the super trend, then it is called as a no trade zone. As a scalper, we don't enter here. Maybe if it is going here, we will look for the resistant trade. If it is breaking above, can you see here? It is breaking above, all the indicators are below, but no volumes.
So means if the price is below VWAP, but above super trend, that will be a no buy zone for you.
No buy zone. This is called as a no trade zone for me. So whenever it is trading between a range, this is the area where the sellers would be making a huge money. That's the area wherein they keep it under control. And when you look at the data, we go and look at the trailing OI data, right? It gives me the complete clue. So trailing OI will tell me whether it is in like in a green or a red based on the strikes which I have selected. How did I select these strikes? It is from at the money, 7 strikes above and 7 strikes below, both call and the put. So this is the total open interest on the call side. This is the total open interest on the put side. So when you look at this data, the difference is in green. That means it is bullish. Why? The sellers have created much less quantity compared to the put side. So if the sellers has not created much quantity on the call, then do you think the market is expected to go down? No, it is expected to go up. Imagine as a seller, you have created 5 crore quantity on the call side, 8 crore quantity on the put side. Then naturally you are expecting the market to move up. So we just needed to look at where the majority of the sellers creating the position. Intraday you will see it's certain moves like this. If you look at this was 2.4 crore, 1.87. Suddenly you have seen a big fall happening in the OI. That means this is the area wherein you would have seen the green candle coming with breaking the VWAP. 12:15 is the time, right? Just look at this. This is a candle. This is a candle. You can see here. From here, the directional change.
Okay. Shiva, when you're interpreting open interest, do you interpret it from the perspective of a seller?
Yes. As an option player, especially being a buyer, I always needed to look at from a seller's perspective. The reason is, sellers are the ones who create the position, and I wanted to know whether they are ready to add positions or they are unwinding their positions, or they are completely like even the buyers are unwinding the position. So from that perspective, I needed to look at the data. That is where the trending OI data on our OI pulse helps us. What we normally look at here is, from at the money, we look at 7 strikes above and below. Here, it is a total change in OI which has happened for today on the call side. This is on the put side. You can clearly see on the call side, it has moved from 1.8 crore to close to 2.2 crore now. On the put side, it is 2.06 to 2.09 now. They have added close to 30 or 40 lakhs here. They have not added much here, only 3 lakhs. That is clearly suggesting me this particular day, it's not completely either to be bullish or bearish. But there is a slight thing which is getting added here. That means the sellers are adding more positions on the call side compared to the put side, which means I'm not going to be getting a massive up move at this current juncture. How I can get benefited from this data? All of a sudden, if you see a sudden spike happening from 2.2, it goes to 3.5 or 4 crore, then you can see a massive call writing happening on the call side. At the same time, you needed to see on the put side as well. Put side, you will immediately see 1 crore open interest falling down. Then it is a safe game for me. From there, every rise, every fall, I will be using that as an opportunity to buy like in a put. And as a seller, every rise, if it is going higher, again, you will try to short it. The reason is the market is expected to fall because there are more call writing positions. Plus, another clue is on the chart itself. Can you see here? As I told you, the RSI between 40 and 50 is a no trade zone. So currently, it is getting into no trade zone. The open interest on the futures is slowly increasing. That means when the market went up also, it is increasing. When the market is going down also increasing. That means both buyer and seller on the futures is getting into the picture. And at the same time, whenever the market is trading near to the VWAP, As a buyer, I 90% needed to stay away. Why? This is the area wherein you will normally see the IV values being more or less the same for both buyer and seller. If you look at the option chain page, you will see the IV values. You can see here 14 on the call side, 15 on the put side. I normally look at the average of 3 strikes above and below, somewhere around 14 to 15. If the market is moving higher, we also needed the IV to be higher on the particular direction. We look for a 5-point gap. Imagine there is 20 on the call side, 15 on the put side. And if the market is moving higher, all the indicators are below, the market is trading above the VWAP, it's a perfect day. Wherein you will get to see every dip is getting purchased. You will normally see on those days, market is making a new high every 30 minutes to 1 hour. That will be called as a trending day. How to identify a trending day? On a trending day, you will normally see every 30 minutes to 1 hour, a new high will be getting created. On the futures, when you look at the futures data, you will be able to see it with the difference as well. So how it will be shown? You will be seeing it with the Nifty. Can you see here? There is a level break which is happening, day low break. If it is market moving higher, you will see every hour day low, day high break happening. Currently, you do not see anything of that sort. Today, it is short build up, long build up, short build up. It is a tug of war happening between a buyer and a seller. It's a sideways day, a perfect day to avoid. If it is a continuous trending day, you will normally see every hour, you will see a day high break. That is a day as a scalper also, you will also get confidence. Why? You will normally see the support and the resistance is getting tested several times. It will come near to the super trend territory, it will come near to the WMA territory, then you will be able to take a trade. Today, if you look at the data, they took some support at the WMA levels, then one round of support near to the super trend. Then once they break this level, I'm not getting the confidence to enter on the downside. Why? If I ask you why, the reason is here you have a clue, here you don't have a clue. Why? The volume parameter. It's getting broken with the volume, I can go and confidently take on that particular direction. If the market is breaking the VWAP without the volume, then I wouldn't.
Volume is a powerful confirmation for you.
Powerful confirmation along with the OA data, volume is also because which going to be giving me the momentum. So large players always play with the momentum, and that is something which I normally look for.
We have talked about a lot of different concepts and indicators. Just to make it easier for our viewers, can we revisit this once and just talk about it again? That how are you using different aspects for these different indicators to make your trading decision?
Okay. So to be bullish in the market, I look for normally 3 things. First and foremost, I needed to see whether all the indicators are below, similar to this. The WMA, the super trend, and then the VWAP, all should be below, and then the candles are getting formed above. First is this. Next, the volume parameter. For Nifty, I normally look for 2 consecutive candles of 125K, and for Bank Nifty, 250K. Considering Bank Nifty is now out of the picture, currently only Nifty I'm tracking I needed it to 125K. So people might be wondering, how did this 125 came into the picture? If you'd have seen the historical volumes, whenever the market has moved above 100K in Nifty, 2 consecutive candles, the third candle from there on, the market continued to move out. So we have, based on the past history, we have done that. Earlier, it used to be 50K. Now it has gone to 125K. If the concentration is going to be more and more on the Nifty, maybe in future, it may go up to 200K as well.
The number you have for Sensex also?
Currently, Sensex, we don't have the number because it is hardly getting traded with 50 or 100 numbers in the quantity. So we do not have anything. But even to trade in Sensex, we use only the Nifty charts because 80% of the constituents belonging in Sensex and Nifty are the same. Remaining 20 is like a negligible. That's the reason we ignore that. But we use the Nifty charts.
Signal from Nifty and trade on Sensex
options as well. Okay, so imagine if I just show you the Nifty and the Sensex chart, it will almost be the same. That's the reason we are not looking at that. Plus RSI parameter. RSI, as I told you, 50 to 75 is my buy zone. Imagine if I'm going on a buy trade, either buying a futures or buying a call, I want the RSI to be 50 to 75. 75 to 80 is the profit booking zone. 80 and above, I wouldn't enter anything fresh. Sometimes, yes, in the morning, between 75 and 80 also as a scalper, I will enter. 80 to 85, I might exit. 40 to 50 is a no trade zone. 40 to 25 is an area wherein I can buy a put or sell the futures. 25 to 20 is the area wherein I'll book my profits if I would have entered in the position. Below 20 is a oversold territory, I wouldn't enter. Sometimes what can be a tricky situation is whenever the RSI has gone above the 80 mark, look at this scenario. This is formed in the morning itself. If I'm trying to enter, immediately you will see normally a profit booking happening. That's the reason you are seeing a large red ball volume candle is forming up. And whenever the RSI crosses at 80, 85 mark, you will see some kind of a profit booking happen.
No trade zone fee.
No, yeah, 90% no trade zone. And whenever it is trading near to this area, I will avoid it, provided the VWAP and then the data is also supporting me that. When the data is of more or less the same, similar kind of an OI getting formed, that is a day wherein the sellers will try to make use of the advantage. They will try to grind the markets and bring down the premium.
So you want to see an imbalance in the call put.
Exactly. I wanted to see a 50% difference between the call and the put. Anything above that, it's a cushion for me. At least I need a minimum of 50% difference. Whichever side the market can go, I wanted this 50% cushion as a buyer to be confident in that particular direction. Plus, make use of the IV levels. And as the IV is going to be more or less the same, avoid. And there are days wherein the market would be going higher, 300 points higher. But IV on the call side would be much lower compared to the put side. That is again a big red flag. Though the market on the futures will move higher, your option premiums may not move. To do that, the IV is needed to move. If the IVs are not moving like this, then you are in trouble. When the market is falling, you can clearly see the IV is falling. The reason is the buyers are exiting their position. Here you can see when the market is like in the prices are falling, you can see the IV levels going higher. Clearly the buyers are trying to flock this. They are expecting the VWAP to be held level and then it can move higher. If the IV is falling on both the sides, that means clear long unwinding is happening. As a buyer, we need to completely avoid. That's a perfect seller's area wherein they can completely take the money.
To understand all these concepts, can we see some chart examples how all these when combined have worked in the past?
Yes, probably like I will be sharing few chart examples and you will be able to see how the two candle theory has formed, where exactly the support has happened, where exactly the resistance has happened. We will see few examples which I will be sharing it in the next few slides. So along with the chart, we'll also be giving you a picture in terms of the wording as well. What are the levels and how we are using it? So everything will be explained. So for the benefit of users, you will be able to see the chart examples and that in the next 2-3 slides actually. So in this particular one, we'll just look at some of the past ones if possible. Okay, there will be a question. Shiva, do you see here, like there is a 2 consecutive candles of red. Can I go and take a trade here? This is the time after 2:33, then I wouldn't take into a trade.
Even on expiry days?
Every day. Two candle theory concept is it needed to be applied between 9:40 to 2:30. So between 9:15 and 9:45, you normally get to see the previous day positions getting closed, fresh positions getting initiated and so on. Only after 9:45, you will see large money coming into the picture. So 9:45 to almost 2:30 is the best time. After 2:30, you will normally see a lot of unwindings happening and also some positional play coming into the picture. So even yesterday, if you have seen the Nifty moves, in the last 30-40 minutes, the move would have been like a little crazy. Between 310 and 330, yes, it might be expiry day play. And Sensex prices, some of them went almost 100, 150 rupees higher compared to the whole day average. So those are the moves which happens in the last 30 minutes. That is for the positional thing we have to avoid. Yes, exactly. We needed to avoid the opening trades and nothing. This is again, you can clearly see, this is previous day. Again in the morning, you're getting a volume. But I would have ideally preferred this particular area. But only problem here is, it has moved higher without the volume. Whenever it is moving higher without the volume, you can clearly see the market tends to correct back. Always remember, if the market is not moving higher with the volume, you will see 90% of the time the market's getting close near to the VWAP. So this is a common observation which you can see.
In this kind of an example, like, can we use it to quickly scalp or this should be avoided?
This can be used to quickly scalp. The reason is, all your indicators are below except the volume. You have the RSI also above 50. You can clearly see the short covering happening here. You can use this as an opportunity for scalping. But imagine if you are looking for a positional play to keep it for 100, 200 points. You do not know when the reversals, it might be coming from here or it may come from here. So you do not know the exact point of reversal. But if you would have gone with the volume, every dip would have been an opportunity. I would have scalped near to the WMA, scalped near to the super trend, scalped near to the VWAP. So all this will be a golden opportunity for me to scalp. And one more example, as I showed you, the golden crossover. Let's see whether we are getting any more here. Okay, so this is another one. Though the fall is happening, you're not seeing the volume. Again, it is for this quick scalp, but since it is happening after 2:30, little be careful. Be careful with that. This is how the golden crossovers will be. You can clearly see the market has moved with the volume. I would have loved first and second candle getting formed with the volume, but here, first and fourth, if you'd have gone and looked at this particular day, this is on 10th. I'll just show you the data on 10th. This is from almost from the morning itself. You can look at the data from the morning. Yes. You can see the open interest on the call side is getting piled up, whereas they are not adding much on the put side. From 190, 266, 305, 350, 348. Here it is staying at that 160 mark, which is a clear sign wherein I can use it as a scalping opportunity even if it is not falling with the volume. I'm going to be going in, punching my orders to take the orders on the put side. So these are some things which we normally look for.
This can be an example.
Yes, this can be an example for the long trade. So this is again happening in the second half. I would have loved any scalping strategies between 9:45 to 2:30. Beyond that, don't try to scalp too aggressively. The reason is there can be a single side, one side of a move. It can completely wipe out your profits and everything. But this is a perfect one. When it is breaking this VWAP with the volume, then the following candle would be a golden opportunity, provided the trending OI data is also supportive. And make sure that the RSI is not overbought. If you look at in this category, the RSI is not overbought, perfect one. And OI also is building up a perfect opportunity for you to scalp. Plus, it's almost getting you to a golden crossover in the following one.
So, I mean, this, if super trend is almost near the VWAP, that can be counted as a near to a golden crossover.
Yes. Always prefer for a super trend and the WMA both piercing vertically. So whenever you see a vertical move happening, that means it's a perfect day wherein these guys are not even going to let you go near to the super trend. So all these indicators, why we use, you can clearly see, look at this. It came, it broke this level, but again the WMA is acting as a stiff support level and then it is moving higher. Okay. As a scalper, these are the things which is going to be giving me a better.
Over here, if the upper trend is in red,
correct.
That is, it's giving a sell signal.
Sell signal.
Would you still go for a long trade?
Yes, I would still go for a long trade because it has broken higher with the volume. When it is falling, it is not falling with the volume. If it is not falling with the volume and if there is a support, I would go and take a trade here using this level as my VWAP as my stop loss. 10 or 15 points below. Don't keep it exactly at that level because stop loss hunting might be happening at this major indicator levels. So keep it 5 or 10 points below, your stop loss will be getting protected. Now, on the way down, if it is getting broken with the volume, then I wouldn't go and take a support trade. So this is an area wherein the support trade should be avoided. Again here, this is the beginning of next day. The market has kept moving higher. So these are recent past. With the new regime, a lot of things have changed. But in the earlier regime, you will see every other day, you will get a lot of moves happening with the volume. You can clearly see this is how the two candle theory.
So in this kind of a regime where things have changed, have you adapted to this kind of a regime with some changes in your style?
Yes. One major change is earlier, if I used to do it with a large quantity, I used to get in like, imagine 1 CR. Now I have reduced it to 1/4 of that. The reason is we needed to understand the new pattern. 90% of the backtesting strategies have not been working. Even here, these are like volume-based moves. These things will remain. Only thing is I needed to refine my volumes. Earlier, if it was 125K, now the volumes have reduced. Then I needed to look at 50 or 75K because number of traders who trade on higher, like in a lot size have reduced. Imagine the premiums are also got increased. So people have started to cut down their position. Then naturally, I also needed to adapt based on that. So minor changes we have been doing it, but these things and the setup has been working so far good.
An important question I want to ask you is that, when you are entering your trade, where do you place or how do you place your stop losses? And how do you decide whether I should trail, whether I should take targets? What is your entire process around your risk management and profit booking?
Okay, so my strategy on the stop loss and the risk management is totally different. As a scalper, first and foremost is protecting the capital. In order to protect the capital, what I normally do, once the setup is giving me the reward, that Shiva, you needed to go on the third candle as an entry. Look at this. This is the third candle. I'm entering here. If I'm entering, the RSI is still above the 30 mark. I'm entering here, third candle, keeping my first candle high as your stop loss. Imagine I'm buying a put. Still, I'm using the future chart, keeping this as a stop loss. Imagine the next candle is giving me another 20, 30 points. This 30 points is more than sufficient. Why? First and foremost, though I kept my stop loss here, I needed to protect my capital. Imagine if I'm making money out of this trade, I tend to book the profit for using the profit as my trade for the next one. So in this scenario, I book my profits when it is coming back here. I would have scalped for 20 points. Now, I already would have made around like 2,000 to 5,000 rupees as profit. In the next candle, when I'm entering, I will enter here. When I'm entering here, 2 lots, 4 lots, and 8 lots here. So that way, my average will be more near to the super trend territory. And though my initial entry is here, imagine I'm 300, 280, and then here it is 240. So 300, 280 and 240. 240 would be my maximum punch. Then my average would be somewhere around 260. Imagine I'm getting 1 or 2 candles here. These 2 candles, it will automatically go to 300. My trade again is done. If I would have kept my stop loss level here, the initial stop loss, can you see here, the whole day the stop loss didn't get hit. That's the advantage of whenever you are getting a 2-candle theory moving with the volume. Whenever the 2-candle theory happens after 9:30, 10, you can look at this. This is a perfect scenario. Whenever you see this data, and this is on which day is that? 6th. If you go and look at the trending OI data also on the 6th, you will see the market would have been rewarding to you perfectly. So you can clearly see on the call side, they've been continuously increasing their OI. On the put side, they've been reducing it from 1.5 to almost 35 lakhs. And every hour they are making a new low. This is a perfect trending day, which I will normally look for. So those days is like an ideal, you will get like a multiple trading opportunities. And as a scalper, look for it.
Let's say you keep a initial stop loss. Let's say it's 10,000 rupees or 5,000 rupees, whatever it is. Then in that trade, you book some profit. Then does that become your stop loss?
Yes. My stop loss strategy is pretty simple. I use the previous day profit as my initial stop loss for the day. Okay. Imagine if I make around 1 lakh yesterday, that 1 lakh will be my stop loss beginning of the day. If I make some money, 10,000 or 20,000 on the trade, then protect my previous day profit and use this intraday profit as my stop loss. Okay. That way your capital is always getting protected. You will also play with a positive mindset. People will ask me, sure, what if your previous day is a loss? If my previous day is a loss, then I will normally go for 10% of my deployed capital as a stop loss. Imagine if I have like in place 1 lakh worth of quantity, 1 lakh worth of money, then 10,000 will be my stop loss for that particular trade.
Deployed capital?
Deployed, exactly.
Not your entire capital.
Not the entire capital. So that will be, so if you're looking at any time, I would have not deployed more than 20%. So overall, if you look at it, it will not be exceeding my 1 to 2% of my stop loss overall capital. So that way you will also still be safe. And anytime when you're playing with your capital or the profit in your mind, then automatically it eases a lot. So this particular stop loss strategy has worked wonders for me actually.
Another thing that scalpers or option buyers have trouble in is that how do you pyramid or how do you average? And first of all, is averaging something that you recommend doing or not?
Average is something, yes, I would do it. Average is an art. You needed to know when to average, when not to average. Imagine if the market is breaking down today. You needed to capture the momentum. You needed to go and buy it. If the price is trading at 300, if I'm entering at 300, I will keep a range, pyramiding range between 270 and 330. So when it goes to 270, I needed to average it. When it goes to 330, I needed to average. So keep the pyramiding range from the level at which you are entering. And if imagine my stop loss is around 250 and the target is around 350. So from 300 till 270 I will average, till 330 I will average. How will I average? 300 if I'm entering 2 lots, 310 4 lots, 320 6 or 8 lots. As it goes higher, you need to capture the momentum, go with the higher lot. Similarly, from 300, 280 4 lots, 270 8 lots, 16 lots. So near to the support territory, you will have the maximum quantity. Near again to the resistance, you will have the maximum quantity. Once it breaks out, you will get a bigger reward on both the sides. So that way, your protection will also be similar, and your risk management will also be similar. Plus, imagine if I'm entering at 300 here, 320, 330, this 2 candles is more than sufficient for me to achieve my 1% target intraday, get out of the trades.
Siva, when you're doing scalping, there's this thing in your head that will I be able to scale this or not? First of all, is it a strategy that is scalable or not? If I'm doing it, say, with 10 lots, can I do it tomorrow with 100 lots or not? So how do you suggest one scales up in scalping?
I would suggest like anyone who's doing scalping to start with, try with 1 to 2 lots initially, at least for a period of 6 months. See whether that is suiting you first of all. Once it is, yes, out of 6 months, I'm profitable for 4 to 5 months, and remaining 1 or 2 months, I'm negligible in loss and other things. I'm still able to manage. I'm not blowing out my capital. Then go from 2 to 4 lots, 4 to 8 lots, 8 to 16 lots. Keep a period of 3 to 6 months before you scale up again. But people, what they normally tend to do is someone who's playing with 1 lakh capital, once they make money for a period of 2 to 3 months, they immediately go from 1 lakh to 20 lakhs or 50 lakhs. The problem is the market dynamics changes every 2 to 3 months. You needed to understand the pattern. Every month is not going to be buyer's paradise or seller's paradise. patterns keep changing. You needed to adapt to that. That's the reason adapting in a particular environment, see whether you are able to completely make that particular period, then go to the next one. There are traders who have come back and said, Shiva, I was able to trade confidently with 5 lakh, but I'm not able to do that with 10 lakh. Once I increase to 10 lakh, I'm not able to do it. Then that means your risk appetite is only for 5 lakh, then reduce your capital, play with 5 lakh. Even as a scalper, yes, we have the limitations. We cannot, in a 3-minute candle, how much quantity I can punch in? I can go up to like 1 lakh quantity, which can go up to like 1 crore in capital or 2 crore in capital maximum. But as a seller, you guys have the whole day wherein you will be able to play along with the time value and the theta, you will be able to win it. But as a buyer, we are going to enter and exit, providing an opportunity for me to make money in the quick time frame. So in those scenarios, I would suggest people to reduce your expectations when you're doing with scalping. Don't think that you needed to capture the entire bottom and the top, which is not going to be possible. And we also needed to accept once your trade is done, the candle will form higher. It will move another 100, 200 points. Do not regret. Because you have decided yourself, you wanted to be a scalper. You are looking for 20, 30 points. If your stop loss is only 30, your profit is also 30, then don't be worried about it. Imagine if you're keeping a stop loss of 200 and only capturing 30 points, then it is a problem. But how you approach the market, then it is a different ballgame. So profit and loss, it's going to be decided by the scalper's mindset, and you needed to accept the risk reward and then be ready with that.
Siva, it has been a wonderful experience talking to you. You've shared so much from your experience. You've shared how to use all these indicators and some valuable tips. And I'm sure I'm going to help all the scalpers out there or traders who want to experiment with scalping as a trading style. So thank you very much.
Thank you, and thanks to Groww team and Arjun here. It has been an amazing opportunity to interact and share my expertise in scalping. Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.